So the RBA has left interest rates on hold, in line with what the market was expecting. And this is a really interesting statement, 1st of August. I'll just paint some context before we go into it. The RBA has basically been following the lead of its peers, its overseas peers, particularly the US, the UK, Europe, and Canada. They have been increasing rates. So too has New Zealand. And the RBA was kind of on and off at the beginning of the year, very similar to Canada. And then they increased rates above 4% and caught some people by surprise. Probably around between April and May, there was a little bit of a surprise element there. What we're seeing in this statement, for me at least, is a little bit of a decoupling from central banks around the world, and particularly the US central bank. I feel that the RBA in this August statement is more gentle, is more satisfied with its work. The wording is quite similar to previous months, but I say gentle because there is less stress about inflation. There is more satisfaction with the fact that inflation is moderating. There's no complacency, of course, because inflation takes time. Inflation is a process of bringing it down. But to me, it feels like they're confident that they're getting the job done. And now they're moving from a little bit of an extreme bias into a more balanced bias. And I think that this is going to be the stance between now and the end of the year. I want to now go through the numbers that I think dictated the stance and kind of where we are economically. For me, the biggest number, the biggest tell sign was the inflation numbers that came out. The trimmed mean, which is what the RBA looks at, it came out on the 26th of July, which was last week. And for the quarter, it showed that inflation increased by 0.9%. Now, that's still above what the RBA wants. The annualized target band range is 2 to 3%, but 0.9 was actually below expectations. And it shows that the trend is going in the right direction. If we actually have a look at the trend here, you can see where the quarterly trimmed mean RBA measure of inflation peaked and how it's starting to come down. And I think the RBA looks at this and says, we're heading in the right direction, and we have to give ourselves some time for the most recent rises to flow through. And so I think this picture here is very comforting for the RBA, or it's probably providing less stress than where they were a few months ago. One of the other interesting parts is the retail sales numbers. Now, retail sales numbers, I don't pay too much attention to them because they can jump around from month to month. But retail sales numbers were actually very weak. The numbers that printed last week for Australia, retail sales were actually down 0.8%. Previous month, they were up 0.8%. Consensus was flat. So it's showing that consumers are now starting to react to rising rates. That is going to further slow down goods inflation. And as retail and other sectors of the economy slow, that's also going to provide relief for services inflation, which is where the RBA has really been worried. The RBA didn't go into this year thinking that goods inflation would necessarily be a problem. They were really worried about services inflation and the spiral, given where the jobs market is. But we're getting a sense now that they're watching it closely, but they're less stressed. So what does this all mean for real estate investors? The real estate market is a really interesting market because it tends to front run the economy. If you go back and have a look at what happened during the pandemic, real estate prices took off. And everyone was scratching their head thinking, why is real estate moving when we're in the middle of a pandemic? Why are real estate prices so strong? Real estate front runs the economy by a few months. And so the fact that real estate prices kind of bottomed and have started to rise, the pace of rises has slowed a little bit over the past month, but residential real estate prices are bouncing. And to me, that suggests that we've probably seen a peak in interest rates. The economy is going to slow. People are going to continue to pay down their mortgages. and they're going to cut spending elsewhere. And when they do cut spending elsewhere, that's going to cause pain. It's going to cause services to moderate. It's going to cause unemployment, and it's going to take a lot of the pressure off where it previously was. Housing looks really stable to me. It doesn't mean that real estate's going to move in a straight line upward, but I think a lot of investors are looking through and saying we're at peak rates and probably there are better days ahead. What we really need to see in housing is a response to supply. Supply is the big problem. If we had supply going into this, I really think that real estate prices wouldn't have held up. But supply is really tight, supply is getting worse, and that's going to support the real estate market. It's a bit of a balancing act for the RBA over the next few months. Overall, some pretty good news. The Aussie dollar is going to suffer until the US sorts out what it's doing. But for the time being, Australia looks really attractive.